Hey, it's Himini. I hope everyone's doing well. So, I don't know if you saw my previous video, but if you haven't, then I suggest to go check it out. It goes over the beginning part of this pattern and explains how to know when a stock can begin panicking. That will help you avoid losses when buying and even open up opportunity to short sell. Be sure to check it out after this video. The goal for today's video will be to try to explain how to know when a stock is bottoming and how to take advantage of it once it's done panicking and begins to find a bottom. Also, I'm going to go over how to manage your risk while dip buying panicking stocks. First few things you're going to need are the same tools I mentioned in the last video. A platform that allows you to view charts in real time. The one I'm using right now is called Thinkorswim and it's offered for free with a TD Ameritrade account. You will also need level 2 to see where the buyers and sellers are at each level, and you will need the time and sales to see how the buyers and sellers are reacting to each key level. Knowing that the original breakout level was in the 315 area, which is the lower horizontal line I drew on the chart on the left. So as the stock gets into the threes, ideally the mid to low threes, you should be looking at the level 2 and trying to analyze where the buyers start coming in. When a stock begins to bottom, you will start to see the same type of action that I mentioned in my previous video, but it will be the exact opposite. So instead of the sellers staying heavy and following the buyers down at each downtick, you should begin to see the size on the seller's side start to decrease. And instead of heavy selling pressure, it'll sort of begin to neutralize, which is the action you're starting to see right now. So keep in mind that it's not a coincidence that the buyers are coming in near the original breakout level of 315. On the level 2, buyers will begin to come in on the left side and sellers will become less aggressive. As buyers start bidding into the ask, the sellers will start to lift as they get taken out. The action that we're seeing right now is the stock actually finding a bottom and reversing. You can see that the buyers are starting to come in aggressively, and the aggressive sellers from before are now getting taken out as the stock tries to uptick. Then, when you begin to see the buyers start coming in aggressively with big size, that is your chance to make a plan, set a risk level that you're comfortable with based on position sizing and the chart, and take the trade. Or if you're just beginning, it's okay to take notes on this while watching it. You can even take a paper trade or trade with a small position just for the sake of testing and getting comfortable with price action and controlling your emotions. There are over 800 examples of this exact setup, highlighted in videos on Profitly, some on YouTube as well. So this is not just a once in a lifetime opportunity. Not that many of these perfect opportunities happen per year, but when they do, they tend to be very predictable. The key thing you need to remember is no matter how predictable a setup is, you will always need to stick to your risk and ensure you don't get stubborn. The setup is only predictable based on your risk level. There's absolutely no predictability in holding the bag outside of your plan. Predictable trading comes from taking advantage of bag holders and other traders with terrible risk management, so do not become one of them. It may work a few times, but in the long run, you will end up experiencing the one trade that wipes you out if you continue playing with fire. Right here, after the stock has already set a bottom in the low threes, this can be another buying opportunity. But this time your risk level of the low of day is more defined and clear cut. But if the stock begins breaking below the day low, that is your indicator to not get stubborn and to just take your small loss. If it holds this area and spikes more, you can now bring your risk level up to the mid threes area rather than the low threes, making this setup more predictable and less risk. Now, as we watch this action, take note that it's sped up, and during the day it might be difficult to be patient during this consolidation. But if you've studied the ins and outs of this setup enough, then you should be comfortable as long as the indicators are still working in your favor and the stock is still within your risk level. When trading predictable setups, leaving money on the table is normal, and it's even rewarded over time. Because taking conservative profits will allow you to stop turning winners back into losers, and it will even allow you to be more prepared in a different market environment. A crucial part of trading is being able to adapt to changing market environments, but learning to take profits conservatively in the beginning is very important. When you are more used to the setups and are confident in your own skills of adaptation to the markets and your own skills in cutting losses quickly, That's when you can be more aggressive, letting your winners run a little more in better markets and cutting your losers quicker or taking profits quicker in a worse market environment. This is why Tim chose to include market environment as one of the important indicators in both his trader checklist guides. The market environment alone is enough to dictate how a predictable setup should play out, but you should never use that indicator without the other 6 indicators mentioned in Trader Checklist. If you go to profit.ly/SSS, you can see the 7 indicators that Tim mentions in his Trader Checklist guides. If you want to understand what these indicators mean and how they affect every single trade, then I highly suggest to go check out his Trader Checklist guide. Thanks for watching my video. If you want more videos like this, leave a like. If you have any questions, leave a comment. I appreciate all the support from each and every viewer. Take care and trade safe.